Hey guys, Ted here from Bodies and Wicks. Just wanted to throw out some really cool stuff out there. I want to call it sponsors, but it's really not. But this is Upgrade. It's kind of like an online bank, just like Chime or something like that. They're giving a $100 promotion through the end of the month. All you have to do is sign up, use their debit card 3 times, and they will give you $100 free. Don't miss out on the opportunity. What's up, everybody? It's Ted here with Bodies and Wicks, and I am here. I'm actually overdubbing this because I'm still having technical difficulties with the microphone and recording this live, and I don't know why. But today we're going to be going over some things that we typically don't go over, actually. So right now, what we're looking at is we are looking at Mr. Flux. Yes, we're looking at Flux. So I've been talking about that one lately, and I got some ideas for that one. And then also some things I've been looking at, aside from Flux, would be this right here. This is Ergo. Yeah, Jesus, almost escaped my mind for a second. Ergo. Ergo is another one that has been, on the top of like the mining list since we're getting closer to, we have been going through the whole ETH merge thing. Ergo has been going up, and then another one that we're going to go over is this one here, which is Ripple, which is one I don't normally ever touch, but today it just made sense. Just looking at the formation of it, I jumped in on it and ended up pulling out some good stuff, actually. Some good stuff, let's just say that. And then, of course, last but not least is my favorite of all time. Um, and I'm having trouble trying to find it, and I don't know why. I think it's because I'm already on Ripple, and I'm trying to type in XMR. But of course, it is XMR. That'll be the last one that we'll be going over, which of course is Monero. As you can see here, I have a little bit of an idea of where I think it might be going. So those are the four that we're going to be going over. No Ethereum, no Bitcoin, no nothing like that. Just those four. We're going to get through them within 2 videos within 30 minutes. Okay? So, uh, see, as you can see with the Monero one, you can see how it's kind of made a specific kind of like pattern, and it's all meeting at a certain low and then pulled up, made two equal highs. But we'll talk about that a little bit further in depth, I guess, once we get there. We won't have that much time to talk about it, but once we do get there, you can see where it's kind of going. But first, this one I am watching really, really closely. This one is Flux. All right, so what I am watching with on Flux here is that, as you can see, it has about this is about the four. I think it's the 4-hour chart where it has about 3 equal lows. All right, so since it has 3 equal lows, that would create a false sense of support, right? So anytime it would be going down near that support is where you would be finding a lot of retail traders wanting to buy. And they would be wanting to buy thinking that it would go the opposite way, of course. That's what retail is all about. It's all about, hey, there's 3 equal lows, so why not you go ahead and buy because that's a safe support sign. When in actuality, that is not a safe support sign. That is exactly what smart money wants you to think. They want you to think that it is safe support whenever it does stuff like that. And generally, what happens whenever you do have something like this is that it will get down close to it, and it'll pull back up, like it did, and then it'll pull back down again, and you know, it'll do it again. But here I just kind of pull away and give you kind of like a broad view of what has been happening to Flux. Um, it went from down to the bottom and then kind of went up to the top, and now we're kind of seeing like this, especially this growth within the last couple of weeks, so about 200%. So I just kind of feel this is a pullback. I don't see this as any kind of anything other than less than that. I don't think this is kind of a reversal of any sort of any kind. It's not breaking structure on the sell side or anything like that. What I do have right now is I have basically a a Fibonacci on a specific level, right? And what I'm trying to show you is that that if it breaks down into that Fibonacci, or that Fibonacci, basically, if it breaks into to about half of that, that is about the level that you'd want to see it break into. Now, the Fibonacci I'm drawing here is the one which I would typically draw, which would be your last low before it breaks a high pertaining a structure, which would be that swing high that you see just to the left. So you would see like a little quick dip down, and then you would see a run up really quick that would break that swing high, um, and that's where I would typically draw my uh, uh, my Fibonacci's. That's the way I was taught, by my smart money instructor, mentor, whatever you want to call them. So, um, so drawing it like that, you can see that they're all about equal lows. So, if they're all about equal lows, that tells me one last thing. It's going to get even lower, unfortunately, before it gets higher, because as you can see up at the top, it makes about 3 equal highs. You have almost like two kind of like double horns up at the top, and then you have one really wick, just a huge wick. So you have 3 equal highs up at the top. And then down below, what you have is you have in this area is your buy side as to where your smart money would want to be buying. Now, would they want to be buying in this area in particular? I'm not exactly 100% because that high that I was talking about, it broke that swing high. It didn't necessarily break the actual large break of structure. So I'm not for sure if this is exactly where they would want to be trying to, want to be buying up, a lot of their assets, and trying to fake people out into going the opposite way. Instead, what I do think, since there is equal lows, right? And equal lows always equals, liquidity, which means again that false support that everybody wants to get used to, and they always fall for it. And they'll fall for that false support, but instead, what would probably happen is that, as you can see, you'll probably fall just below that. And just below that, there is an area to where there is some equal lows, right? And also just left to those area of those equal lows is a bullish order block, right? And the bullish order block is your last bearish candle before the bullish candle pulls up and closes above it. And when that happens, then that is actually a sign of a more bullish chart. Um, and generally, what that means is, yeah, the smart money pushes it down really quick, and then so they can get a cheaper price out of it, and then they'll buy it up really quick. And then so once they buy it up really quick, they'll sell it at a high price, and then it'll fall back down to about the original price to where they bought it from. And then that around there is when they start buying it up again. So if we draw, what typical people would have as a Fibonacci, which is what you see here, then yeah, then right around that area that I'm talking about is that smart money area buy. It's exactly where that is. So, and I think that maybe where they be wanting to try to take it to be honest. So, uh, we'll just have to wait and see to find out. I definitely have a limit set. My limit is set at 10633 to be 100% honest. It's gotten close a couple of times. It's gotten down to 106.4s, that's for sure. Right now it's about 107.51 after re-recording this and doing it again. But I think it's going to drop back down into that box, of course, and get down again below those two equal lows I'm talking about there on the left, right? That's also within that smart money buying box, right? It'll probably get close to the bottom of that. That's where I think it's going to get close to. So I probably should have put more something around the limit of something around 0.8644, something like that. And who knows what they could be doing with it? They could be making it bounce up and then make it consolidate a little bit and then try to bring it down and then try to yank it up. Who knows what smart money could be doing with this chart right now? That's why I'm saying be patient, be diligent. Just look at wherever you see the signs are, and make sure that you're following those signs and you're not just trying to, just follow price wherever it goes, because just following price action blindly uh, will pretty much lead you off to the end of a cliff is what it will do. Believe me, I've done it plenty of times, and it is not fun. All right, so uh, now we are on to Ergo. So, what is up with Ergo? Ergo, again, another chain that has recently come out that is proof of work as well. That is, another one I think the miners are kind of sliding over to, trying to supplement their income, from the Ethereum. What we see here is, you know, you kind of see, especially when you look at it from the daily perspective that I have it there, you kind of see it falling down, sliding down, and it rips back up really quick, right? And then it kind of comes back down and even out, and then it rips back up really quick. And then once it doesn't really rip back up really, but it rips up enough about halfway, and then it kind of makes another curvature, and then right now it's about equal height with where that ripped up before. So again, you're at that liquidity level. You're at that false sense of um, resistance, right? So a lot of people here would be wanting to sell because they see two equal highs. They go, oh, well, that's two equal highs. Why wouldn't we sell? It's already hit the same spot twice. So, why wouldn't we sell? Well, because that's what smart money wants you to think. They want you to think that. They want you to sell right there. And so what probably will happen is it will sell off for a little bit, and then it'll probably yank back up, kind of hang around that line a little bit, and then boom, take off. And more than likely, that's almost what happens every single time you get a chart like this. That you almost every single time, and because it has two equal highs plus around the 162 mark, which is the golden ratio, the 162% mark. There is also another high around there. Um, there is just too much, I believe, in this chart. And that's just one of the ideas, right? There's actually a second idea that could actually possibly happen, um, but I'm not for sure if it's going to. and if it does, then I will have it drawn up for you. And it is going to make it just a little bit lower than what I thought, but I'm not for sure if that is actually going to be the case. But